How's that? Is that better? All right. Okay. Well, who knows what's going on there, folks? But that's the interesting thing with live streaming. There you go. Hopefully, give us a shout out in the chat if the sound is back, folks. Good to see all of you guys on. I know it's a bit of a public holiday for many of my listeners, but for some of us, if we're in QLD, well, some of us are doing something today. Good to see you guys on. Bit of a shout out there to Luke, Aaron, Simon, Ben, Kelly. Yeah, good. All right, the audio's back. Hey, great to see you guys. Took a little bit of time out last week to hang out with my youngest son at school camp. Well, that was interesting. It was fun. It's great to have the opportunity to spend some time with your kids one-on-one. There you go. But welcome, folks, to another Wealth Coffee Chat. Good to see all of you guys here. Anybody who's new to the show, well, you probably should know who I am, but if you don't, that's my name there, Jason Whitten. Been property investing well over 20 years and coaching property investors, maybe just like you, over 18, across Australia and New Zealand. And along the way, we've done a few things. We've helped clients buy many thousands of pieces of real estate, bought many properties myself, and along the way, learnt one or two things. And each morning, you and me, if you're into it, passionate property investors, mad investors, we get together and have a chat. I call it a wealth coffee. The idea that real estate investing is a marathon, not a sprint. It is something that you and I need to understand is not a get-rich-quick scheme. If you're here, you're wandering by and you're saying, oh, what's this about? I'm into wealth, and you know what? I want 1 minute wealth, 6 minute abs, 5 minute abs. This is not the show for you, so move on. If you're here for get rich quick, rack off, because property is not a get rich quick scheme. Never has been, never will be. Anyone who tells you that is full of rubbish. Well, full of shit anyway. Anyway, there you go. Little momentary rant this morning, and there you go. Good to see you, Ben, on deck. Everyone's ready to go. Hey, let's talk about supply today in the marketplace. Tomorrow night, for those in our mentoring program, big shout out to you guys who are in our coaching and mentoring program. We have Dr. Andrew Wilson coming along to do State of the Nation, a bit of a brief on what is going on, a deep dive into the stats and the marketplace. You must not miss that one. It's going to be an absolute cracker. And for those who are in our Facebook groups, you'll get an invite, one time, one chance to come along to just Andrew's presentation. We've got heaps of other stuff we do on the night, exclusive deals and other teaching and training, but you might get an invite to that too. So keep an eye out for it. Hey, let's talk about the idea of supply. And is supply, what do you guys reckon? What's the big kahuna? What's the thing? What's the thing? If there was one ring to rule them all when it comes to the drivers of real estate value, and let's talk about this today. Let's talk about the idea that real estate value is not only limited to capital growth. I think capital growth is, to be honest, fool's gold. And some people look at me strangely and go, oh, I don't, what about your wealth? Do you want your properties to grow? Yes, I do, absolutely. But it is not the measure of a successful property portfolio. Certainly not in the early days. The idea that we can recycle our equity and continue to grow and buy more properties, that's part of the point. But tell me in the chat, if you guys are sitting there going, all right, what's today about? What do you think the big kahuna might be, or would there be one ring to rule them all when it comes to the drivers? Remember, we've got interest rates, we've got supply and demand, we've got population, we've got politics, we've got infrastructure, we've got the economics of the country. Like which which driver do you guys think? Chuck it in the chat there for me. Which one do you think might be one of the bigger ones? And it's connected to one actually. So it's kind of a trick question. I'm setting you up here, but put it in the chat for me right now. Which one would be the big one? Families' perception, close to infrastructure. Yeah, okay. Yeah. Land availability, so supply. And Nikhil, yep, supply is what we're going to talk about today. I think supply is a massive one, probably be up there, and depends on the supply of what we're talking about. But supply of land, yes, but what supply, if we can't get access to this stuff, what happens? It happened in 2017. It happened in 2017. What happened in 2017 to us as property investors? Tell me that in the chat while I have another little coffee. What happened to us? Who got involved? Who messed with our mojo, folks? Who messed with our mojo? What happened in the GFC? Who messed with our mojo when it came to availability, supply of this thing? Tell me that in the chat. What do you guys think? Can you remember? Did it affect you? It affected me. It affected a lot of my clients. I can tell you that one. Yeah. APRA. Those meddly buggers. Getting involved. Oh, hang on. You know what I haven't done? Well, a few days off and I'm off the pace on my tech team. But anyway, you know, this is live television. We can roll with it. Let's see how we go here. It should pop up any minute now. There we go. There you go. Voila. APRA. Yep, absolutely. APRA. The supply of money, the supply of credit, folks, is the number one. It's the one ring to rule them all. If we can't get access to credit, the borrowing world, the ability for us to buy and pay a certain amount of money for a certain property gets affected. And right now we've got interest rates slowly but surely going up. I don't think that's a big deal. Everyone's carrying on like a bunch of pork chops. Listen, even at 4%, money is dirt cheap, so cheap. Get over yourself. And I'm not telling you guys anything you don't know. Right now, money is cheap, and over the next few years, it'll go from like 2.5% to 3% to 4%. That's what's going to happen. Don't miss the opportunity in all of this, though. So let's talk supply. And we're looking at right now, there's a couple of stats right here that I've got for you that we're going to share more tomorrow night. So I'm not going to give it all away. But check this out. Check out what's going on right now. This is the medium density marketplace down in Melbourne. You know, I put in the description. Check out how low the supply of medium density. Medium density housing is the only housing you can oversupply, folks. Right? You know, houses, land and houses really gets managed extremely well, and it doesn't get oversupplied by any stretch of the imagination. But you know, at the end of the day, let's put that on. Supply matters. Right now, we have significant undersupply in the marketplace. And really, this 10-year average right here, if you have a look at the last few years, it's been down, like the prices at, I don't know, Kmart or Target or whatever. The difference, that's an 80% down in supply in Melbourne right now. Now, I'm a big fan of Melbourne. I think it got beat up pretty significantly in the lockdowns. But supply right now of this city is under massive pressure. Come over and have a look at Brisbane. Brisbane hasn't been too bad, but the last few years, again, still quite undersupplied. We had a good supply of apartments up in Brisbane. A lot of people are afraid of a supply, and I like a good supply market, because what happens when things are supplied or over the long-term averages, you can have this concept called the proximity for profit. All right. Oh, hang on. The proximity for profit. Now tell me, Anyone know what proximity for profit mean in the chat there? The proximity of profit is your ability to buy a property in a location that you wouldn't normally be able to do so. And when you have supply, that makes all the difference when it comes to the ability for us to purchase properties. Now, in those years, sort of 15, 16, 17, because that's when the supply sort of came through, we were able to purchase amazing bits of real estate within that 1 to 5K radius of the CBD. And we were able to purchase in Brisbane, we were able to purchase housing within that 15 to 20 kilometres of the CBD ring. In 2017 and 18, we were doing houses in Pallara for $450. $450. You know what they're worth now? Anyone know what houses in Pallara in Brisbane are worth now? This is a bit localised anyway for Queenslanders. $750 to $850. All right. Anyway, so we've got an undersupply here also, massive undersupply. And right now, tomorrow night, you'll see when Andrew Wilson comes through and talks about the supply. So what else is in the way of our supply chain right now? What else is going on when it comes to the supply of real estate? Well, I can tell you right now, not only new real estate is affected, not coming to market for investors, for owner-occupiers or renters. That is down a long way. New property is significantly reduced. But right now, we have a significant downturn in the listing of existing real estate for sale in Australia. Significantly down. Have a look at Brisbane, Adelaide, Perth. All right. Canberra's back up a little bit, and this is compared to last year, and last year was pretty low as well. You have a look at the regionals. The regionals are in bloody all sorts, right? And the regionals are worse because there's no supply out there ever anyway, right? There's no supply out there anyway. It can be a bit misleading, 20 properties listed, and now there's only 10 properties listed compared to last year. The volume there, those can be a little bit misleading, those stats. But have a look at these ones, folks. Have a look at that, would you? Look at that. Down. Melbourne, again, significantly undersupplied when it comes to the production of real estate and undersupplied or less listings than there was a year ago. And that's not going to get much better, ladies and gents. So supply is a challenge. New supply is a challenge. Existing supply is a challenge for us and the marketplace when it comes to where we're at right now. And if you have a look at trying to supply, let's say we're going to try and supply more properties to the market, well, what's happening to our cost of housing? Cost of housing has significantly increased. All right, you have a look at this, kind of used to cost us about, $320 to $340 for a nice house, and now that's gone up, close to $80,000. Call it 80 to 100K. All right. So supply, time frames, construction, costings. What else is being constrained in the supply, our supply chain when it comes to the real estate world? Well, let's look at this. We've got the lowest unemployment rate since 1974, folks. All right. So, which is great news. People have got jobs, which is exactly what we need in this country. We need people to be happy, productive, earning money. That's what we need. The challenge is a lot of people don't have anywhere to move to or live. But ultimately, all of this undersupply stuff, tell me, all this undersupply stuff, undersupply of new real estate, undersupply of existing real estate being sold or available to market, construction costs going up, which means undersupply of materials, not enough people to build the thing, so undersupply of people. What are all of those undersupplies leading to right now in the market? Tell me right now in the chat, folks. There has been a softening of capital growth progression, which is completely 100% normal. Listen, just because we're not getting, 10% growth this year again, after 3 years in a row of 10% growth, everyone's going, oh, the sky's falling. What a bunch of rubbish. It's normal, right? It overshoots and it compresses a little bit. Settles down, runs again. Absolutely normal. But what's going now? Yep. Real estate, like you said, Luke, when there's uncertainty in the market, people go into real estate as well. But what will, when it comes to our neck of the woods as property investors, what is going to be significantly stimulated and go up in the next 2 to 5 years? I think I've talked about this before. We are right in the middle of a massive what boom. It's on like Donkey Kong, and it'll be completely irrelevant. The interest rate rises. This is how we deal with those. It doesn't matter to us as property investors. Owner-occupiers, yes. If you are stretched, if you couldn't afford it in the first place, which you wouldn't have got the loan unless you lied, or your circumstances have changed, rents up. Boom, Ben. Rents, team, are going up like just there's no tomorrow. There's no supply. There is no supply in the marketplace, and rents are up. Look at this, 5, 6, 7, 9%. So Sydney right now, Sydney's values might be flattening out. Not values, but capital growth. Look, listen, we've had progression, and then it's going flat. So what? Who cares? Whatever. Like, at the end of the day, things might soften a little bit. Something that was, someone would have paid 2.2 million because they thought they were going to miss out, and they should never have paid 2.2 because that was ludicrous. They might pay 1.9 for or 2 for. Who cares? In the long run, owner-occupier values like that, it doesn't matter. If you're an investor, buying something for 2.2 and renting it for a 1.8 rental yield, well, that's ludicrous as far as I'm concerned. But anyway, there you go. Yes, and population immigration boom. It is coming, folks. It's on its way. The government, as they always are pretty useless when it comes to getting stuff together. But there's hundreds of thousands of applications to enter the country. 1,000 students, folks, an earmark to come back into the country. They're going to land in Melbourne, by the way. Majority of those go to Melbourne and Sydney. It's going to be an interesting time. But rents are up. Let's say values are slowing down or getting flatter, but rents are going up. Team, this is what we want as property investors. Ultimately, we want our rents to increase as we go. And look at the vacancy rates here. Check it out. There's only 2 cities in Australia, which is Melbourne and Sydney, by the way, that are over 1%. Everything else is under 1%. Now, for those of you who don't get this, and under 1% vacancy rate is ludicrous. There's nothing to rent. People are sleeping in their cars. That only happened in mining towns in the mining boom, team. And that's happening in our capital cities. And Melbourne and Sydney aren't too far away from that, ladies and gents, folks. Let me tell you, it is ludicrous what is going on when it comes to our vacancy rates, okay? And we got no supply in sight. Yes. The cost of money is going up, not the access to money. And so this is what we've got to know. This is what we've got to know, folks. The cost of money is going up. That wigs people out. It'll only wig them out for a minute or two, and then they'll go, well, the world didn't end. Yeah, no shit, Dick Tracy. World doesn't end in that way. Every time. GFC, APRA, mining booms, or busts, whatever. It doesn't end. It changes. And for smart property investors, we need to understand what and how it might change and how it might affect us. Let's be real. We need to be smart about what we do. Good buffers. Be in position for the next deal, whatever that might be. So anyway, there you go. The supply conversation. it's in our favour if you're a property investor, okay? And it's in our favour because it all points to us being able to increase our rents. Something else that's going on, if you've got equity out there, you should be equity locking. I might do that tomorrow or the next day for one of my Wealth Coffee Chats. But for today, ladies and gents, Wealth Coffee Chat, done and dusted. Supply is in our favour right now. If there's something that you want me to cover in one of my morning Wealth Coffee Chats, let me know. Give us a shout out in the chat. But other than that, folks, done and dusted. Hope you're all well, staying warm wherever you are. And remember, this thing is a marathon, not a sprint. And the idea as a property investor is to buy something very well and don't sell. I've changed my tune a smidgen. Strategically sell if required, transforming that value into a tax-free environment. That's an interesting trick. Well, it's not a trick. It's actually following the rules. There you go. Anyway, I'm rabbiting on. You guys be awesome. Join us tomorrow for another Wealth Coffee Chat. And tomorrow night, folks, it's not tonight, by the way, mentoring. It's Tuesday. Don't miss out. Andrew Wilson's going to give us the lowdown on all the data and the stats in the marketplace. There you go. I'm done. Adios, team. Be good. Be well.